Hello, and welcome to the latest episode of Cannabis Unlocked. In this episode, Joe Lustberg, co founder of Upwise Capital, joins me, Key Investment Partners founder Jordan Youkilis, to unpack what's happening in cannabis debt markets. The conversation begins with Joe's background, from his origins in the New York cannabis scene to his entrance in direct lending, which eventually led him to build Upwise Capital. From there, Joe and I dive into the current state of debt in cannabis, which has been marked by a sharp rise in the cost of capital. Next, we discuss the evolution of MSO strategies from their initial playbook of growth at all costs to leaner, cash flow conscious operations. We then talk through the process of restructuring cannabis businesses with no federal bankruptcy protections, what lenders are doing to protect their assets, and the critical importance of choosing debt partners who understand the unique risks of the sector. The episode closes with a look ahead, including the rise of the intoxicating hemp products, the competition they present, and the harm legalization could do to smaller operators. Please enjoy the episode. So, good afternoon, everybody, and welcome to the latest episode of Cannabis Unlocked. I'm very excited today to be joined by Joe Lustberg. Joe, how are you today?
Good, Jordan. Thanks for having me, man. Appreciate it.
Absolutely, man. Excited to have you. It's been great getting to know you and the Upwise Capital team. You've been one of the leaders in getting debt deals across the finish line in our sector. So, really appreciate all the work you guys do to support the industry.
Yeah, of course. And we appreciate the key team as well. And, keep trying to push this industry along and get deals across the finish line as much as we can.
Yeah. So, Joe, to kick it off, would love if you would just give the audience a little bit of background on yourself, where you're from, how your career developed, and how you ultimately ended up getting into the cannabis industry.
Yeah, sure. It's a pretty crazy story. So, first is I've always had a love for cannabis. Ever since I was young, I was growing cannabis. And, I'm a born and raised New Yorker. I think the first time I smoked cannabis was maybe when I was like 12 or 13. And I remember, asking my brother like what it feels like to be high. And then he's like, why, you want to try it? And I said, why, you have weed? And he said, no, but dad does. That blew my mind. And, for my younger ages, I always had weed from my dad and always took weed from my dad for many years. And then, in college, it took on its own life where, me and my brother were in the legacy market for many years. We grew cannabis in college and, we're very entrenched in that market. And then from there, I went to school for urban planning and business, a double major at Albany. And, I really didn't know what I was going to do with my life, but I knew that I loved money and weed. And I got a job working for a company called BizFi. At the time, they were the largest unsecured direct lender in the country. They're originating probably about $100 million a month in cash advances. It was like them and On Deck Capital, the two biggest. And in 2014, we got in a cannabis deal. I was known on the sales floor as the top sales rep and the guy who smoked the most weed. So they gave me that deal. It was the great solution. We ended up giving them like $1.3 million.
Wow.
They took that and paid it off very quickly and took another tranche of like 3.5 million. And, it was very expensive money at that time, and I watched them grow their business on very expensive money. And then I started saying to myself that there's got to be other lenders out there in the market that, have financing opportunities and, the ability to do equipment financing and construction loans and sale leasebacks and line of credit and term loans. So BizFi's model was to be a direct lender, but they were also like the super broker that did SBA loans, term loans, line of credit, inventory, equipment. So when they ended up going out of business in 2017, I took that business model and built it on steroids for traditional finance and cannabis.
Hmm.
Um, we've been in cannabis ever since 2014. It's really been my, focus on my larger transactions that we do. Um, you know, as the industry evolved over the years, I would say 2022, our business was 70% cannabis.
Wow.
Now, you have to diversify, and it's the opposite. Our business is now 70% traditional and 30% cannabis. But, we're still able to get debt deals done. A
Hmm.
lot of debt lenders have exited this space. A lot of them were lending on cannabis real estate value, giving a lot more money to operators that couldn't handle the debt.
Yeah.
So, you know, we love this space. We'll be in it for a long time. I became an operator myself. We're born and raised New Yorkers, lived here our whole lives. When the applications came out for retail, the first licenses were card licenses, which means if you had a cannabis conviction and you ran a profitable business, you were first in line to get a license. My brother happened to have the cannabis conviction, and we run many profitable businesses together. So we won one license with my brother, and then my assistant won a license, and my marketing guy also won a license. So we're looking to open up Mott's Green Grocer somewhere in the Hamptons, in the Hampton Bays. We've been battling the town for a while, but this will be my first time being an operator, and now I understand how difficult it is to be in their shoes. It's a totally different game.
Yeah. It's a totally different game.
You
It's
know,
crazy.
yeah, it's
But I
tough,
love
right?
I love the name Mott's. You were giving me a little bit of the background on what that means, if you wouldn't mind sharing.
Yeah, so Mott's, it's called Mott's Green Grocer. And the concept of the store is more of like an old school New York style deli slash pizza place. Mott's also goes on the Italian vibes of mozzarella. But like Mott's to me, first of all, my pledge name in college was Mott's, and a lot of my friends called me Joey Mott's for many years, and really just means good weed, but also means like delicious or yum,
Yeah.
right? If I eat a really good chicken parm, I say, "Ooh, that was Mott's." If I smoke really good weed, I say, "Oh, that weed is Mott's." It's just like a slang that I've been using for my whole life since childhood in my town. And it's, you look up and it says Urban Dictionary, it says somebody, Joey something, posted it. It wasn't me. But it says slang in Long Island, Staten Island, or Brooklyn for really good weed. And to us, it means much more than really good weed, but it's a whole vibe of our store and our concept. So, we're looking to bring the Mott's to New York, and hopefully we can get through the municipalities and open our doors one day.
Yeah. Is that the same as matzo ball?
No, no,
Funny.
no. So it's Mottz, and again, it has to do with like almost mozzarella cheese,
Uh-huh.
Mutz and Mott's, but like it has so many different meanings
Yeah.
to us that you could use it for a matzo ball, right? Use it
That's
for
funny.
anything, but yeah, it's definitely our dream to open up a store, at least one. We're gonna open up multiple, but to sell weed legally in New York and be in the Hamptons market is been a focus of ours for a long time. Uh, we know being an operator is not easy, but
Yeah.
want to do it in the state that we grew up in.
Awesome.
Yeah.
So going back, you talked about how 2022 is like 70% cannabis business and that the debt markets have really contracted since then in the
Yeah.
space. And I was just hoping we could double click on that. What are some of the dynamics you're seeing in the debt markets over the last few years?
Cost of capital has gone up drastically, right? You know, we've seen a lot of lenders are looking now for profitability, and they're looking for the ability for, a company to service debt, right? So most good lenders in the space are looking for a 1.25 debt service coverage ratio. They're looking for limited license states, right? And it's always been a state by state game,
Mhm.
but companies like us, Upwise Capital, we're a full service debt marketplace. So, on our platform, we have 115 lenders and we have 54 banks that will lend to cannabis. So even in compressed markets like Michigan and California, we're still actively funding deals every day of the week. It's for us, yes, we focus on limited license states, and that's where we're doing a lot of build out loans and real estate loans and construction loans. But, the days of lenders, you know, lending $20 million on a, 50,000 square foot build out is gone. Lenders lend on as is real estate value now, and they're looking for profitable entities. And the rates are just, mid to high teens. And, that's kind of the reality of the situation, unless you are one of those unicorns that are profitable and you're running a lean, mean business and you can meet that minimum debt service coverage ratio, then you deserve a better rate and, you'll yield a better cost of capital, and some longer terms and longer amortization schedules,
Mhm.
But there's debt capital available for every operator in the space, right? If you have cash flow and you're 6 months in business, we can get you an offer. If you're, losing money and you own real estate, we can get you an offer. If you're super profitable, we can get you a much better offer. Right. So it really just depends. But the markets have compressed. Deals are tougher and tougher to get done, take more time to get done. There's a lot more due diligence that goes into it. You know, we were just at Benzinga and, we saw a lot of operators that I did loans in 2020 that are now completely out of business and, struggling to pay back the investors that put all the money. So, you know, if you, the really big thing of overbuilding is, I think the lesson that has been learned in cannabis over the
Yeah.
past 3 years is, not always getting the top of the line technology and the most expensive lights and the most expensive everything to create this absolute state of the art environment. Sometimes in certain markets, it won't make a difference when compression and the price per pound wholesale starts to drop,
Mhm.
right? So you just have to be smart on how you use your capital and, be able to get that return on investment quickly because, think about it. If you're building out in a new emerging market like Missouri or one of these markets and you're spending 30-40 million bucks, how many years are it going to take you to make that back?
Yeah.
The lean, mean operators who start and phase it out and do it in small phases and then grow off the cash flow, is a much more successful route.
Yeah, it's really interesting. That's a dynamic we're seeing play out where, I think 2021 timeframe when the publics were going crazy, everyone felt like, all right, the winners have already been picked. They're the publics. They've raised all this money. They've got all these assets. And now, as the debt markets have contracted and the equity markets have effectively dried up completely, you're seeing that a lot of those players that grew too fast and overextended themselves and overlevered themselves are now having to fire sale assets. Meanwhile, to your point, the folks that were a little slower, steadier wins the race are now able to buy these great facilities for pennies on the dollar. So it's really interesting.
Yeah, I mean, I just got off a phone call with an operator who picked up a lot of assets in a very good up and coming market that a big MSO put $40 million into and, walked out. And so they were able to pick that up for, like you said, 20 cents on the dollar, right? It's now they're left with a great facility if they can turn it into something and put their brands in there and, and those lean, mean operators that run in certain states, when they come into one of these limited license states, they're gonna do well,
Hmm.
right? And you know, a lot of times everybody used to talk about the MSOs planting their flag is the best route, acquiring all these assets and acquiring all this real estate, but the capex that it takes to do that, is drastic.
Hmm.
The asset light MSO, that new model, is a profitable model.
So then with regards to a lot of these publics, I don't quote me on the exact numbers, but I think it's something like north of 2 billion is set to
I,
mature in the next 18 to 24 months.
yeah, I spoke to Bo Whitney from Whitney Economics at CWCB, and he said it's 4 to 6 billion,
It's
and
crazy.
that's coming due at the end of 2026. And he said, the Wall Street Journal called him and asked him like what the real number is, and he says between 4 and 6, and they just took 6, and I'm like, of course the Wall Street Journal is just going to take 6, and I said, well, let's just call it 6. I said, out of that 6, how much is MSO debt? And he's like 4.
Wow.
So like if 2/3 of it are MSO debt, what's really going to happen? I've been talking to a lot of people about this, and about this looming debt that's coming in the end of 2026. A lot of those MSOs, when they got those loans, the rates were much different than what these lenders are putting out cost of capital out today, right? So they're gonna have to refinance at higher rates. That's kind of the only option. All they're doing is just kicking the can down the road for
Right.
the future, right? There is no other option. I've thought about it so many different ways, and there is no other option, right? It's just to refinance and try and get into a better situation if you can. But if you're one of those, big MSOs, they get 9%, like, there's no way you're getting that today.
Yeah. But even on the refinancing side, it feels like a lot of the larger lenders who would have the dry powder to do that are just putting the brakes on. So I don't know. I worry that there's just this big wall that we're about to hit.
I mean, like I said, it's just kicking the can down the road.
Yeah,
It's not like they have to deploy that, right? That it's already been deployed. It's just refinancing, restructuring, and
sure.
stretching the maturity, right? And I feel like the big lenders, Chicago Atlantics with these $420 million loans, like, that's the option. The option is to refinance and for them to get a little bit higher yield for their investors than they got 5 years ago.
Hmm. Hmm.
And that's what's the only other option. There's nobody else who's got that type of money to buy them out.
Yeah.
Yeah, so that's what I see happening with all this, the big debt in our space. Everybody else, all the little operators, most of our customers, same thing. They'll refinance. A
Hmm.
lot of them also, took loans for construction loans. And if they're able to get themselves profitable and become EBITDA positive, and they're willing to move deposits, we can then transition them to a bank loan
Yeah.
and get into something better. And that's really the goal with most customers, is to build
Hmm.
them out, get them a construction loan, get them some equipment financing, get them operational. In a year down the road, hopefully they're profitable so that you can transition them into a bank loan. Where, yes, it's a lower loan to value from the bank, but at least you're getting, almost like a traditional mortgage, like 9 to 10.5% over a 10-year term with a 25-year amortization. You know,
Right.
that's the goal with most profitable companies for us.
Makes sense.
Yeah.
And then for lenders in the space, one of the headwinds they've had to face is that when a business does default and needs to go through a restructuring process, because there's no federal bankruptcy protections, it's been harder for the lenders to force a change of ownership in the collateral. So, I mean, how have you seen that play out, and what steps have lenders taken to get comfortable there?
Um, they put that in their agreement, some of them, right, where they secure the license and they don't allow the license to move with the property. The license stays with the property specifically. And then, it's an assignment of the license, and then they, try and plug and play one of their profitable operators in place. And we've seen many lenders successfully do so, and then, certain lenders where it's taken many years to figure it out through the courts and, come up with that collateral, be able to operate that property.
Mhm.
Um, you know, there is such a specialized use to a lot of these properties, right? So having that license attached to it brings a lot of value to most of these lenders. But, you know, we do even have some lenders that don't even, will just do a straight real estate loan, and they're just funding the real estate entity without the license attached to it. So there are definitely both ends of the spectrum. The more cannabis specific the lender is, where they're strictly a cannabis real estate lender, those are the ones who understand how to secure the license and, put a new operator in place in case they need to. But even those agreements, like once an operator is put in place, you know, having that lender as your landlord is not easy either. So it's definitely tough, but you know, operators just really need to make sure they're getting in bed with good lenders who are not loan to own lenders, right?
Yeah.
That's another reason why they should hire us, is because we advise them on the best options for their business.
Yep. Yep. How are you seeing operators handle competition from intoxicating hemp? And are you seeing institutions lend money to intoxicating hemp companies?
Um, yeah, I mean, hemp is huge market for us now.
Hmm.
Um, we're seeing more and more hemp business, especially with the beverage space, right? Like,
Mhm.
hemp beverages is really taking off, and it seems like to me, a lot of people are stepping into hemp beverages. Especially in the states where, it can be sold through the typical liquor channels. And you can just get a beer distributor to sell hemp beverages. But yeah, hemp is booming right now because
Yeah.
of all the legislation that is going on. And the market has bounced back, right? Years ago, these guys were struggling. Now it's more of a supply issue than anything. The hemp operators that we're working with are all profitable businesses. They're growing their business and they're looking to expand, and they really, the use of funds is to acquire more material to process.
Wow.
Um, from conversations we have every day with hemp operators, their biggest obstacle is finding more farmers. So you're looking at like a tomato farmer or a strawberry farmer that normally is running traditional crops, and then you're trying to convince them to run at least one cycle a year for you with hemp. Because that's what they have to do now. Yeah, I mean, the hemp market is definitely starting to boom,
Mhm.
from an operator's standpoint. We've even seen operators in California, that were really struggling in compressed markets like Humboldt, who switched their whole farm over to hemp and now are super profitable and successful.
Wow. Wow.
So, um, hemp is definitely a great market. It's such a loophole to me, and it's so crazy because it's the same plan, and you have THCA, Delta 9, Delta 8, all the different, you know, variables of it. But, either way, it gets you high, right? And to me, I've always been a consumer that just consumes flour, I'm not really into edibles and all the other stuff. But like my mother and grandmother, like they would never smoke weed,
Hmm.
right? They would never just smoke a joint or, smoke a bowl or something. They would drink a THC hemp drink though,
Hmm.
and they
Hmm.
have, which to me, like hemp drinks are the way to the masses.
Hmm.
And, I think it'll definitely, help to grow the cannabis industry, for the better. So,
Yeah.
um, we definitely see a lot of hemp deals that are surprisingly very profitable, and, hemp industry is starting to bounce back without a doubt.
Yeah. Yeah. So, what is your crystal ball in terms of regulatory outlook, and what do you think it'll take to get new debt investors into the market?
Um, I'm a pessimist, to be honest with you. Everybody is, I mean, I would like for rescheduling, that would be great. It would help a lot of operators from a tax perspective and a profitability standpoint, right? They'll be able to take advantage of certain write-offs like a traditional business. And then the guys who just couldn't qualify for that 1.25 debt service might now qualify. And then you have the federal legalization and safe banking. Um, I just don't think that I think a lot of operators think that federal legalization is the key to their business and what they're waiting for these big exits one day. And it may help the MSOs who will get exits from the big alcohol, tobacco companies and pharmaceutical companies, right? But these small operators in Missouri and New Jersey and New York and Michigan who are super profitable and they run lean and mean businesses, and it's the reason they're profitable is because they're location, and it's because their state is limited license state, or they just have a really good location of their dispensary or, whatever. Those operators, once federal legalization comes, there goes their business. Their super profitable business overnight is now, not that profitable anymore because you can cross state lines. So I think that a lot of these operators who are waiting for that rainy day are going to be in for a rude awakening if federal legalization actually comes. Who knows what the cannabis landscape will look like then and how it's going to affect these small operators that are super profitable running these great businesses. Overnight they could be forced out and pushed out, so just think about it, right? Like the
Hmm.
price per pound wholesale in some of these really compressed markets is $400 a pound. So if now somebody in New Jersey who's selling at 3,000 a pound has to compete with somebody who can sell at $400 a pound, what happens to your business? It's destroyed. So I am not pro federal legalization as of now. I think it'll hurt this cannabis industry. It's always been a state by state game, and even if federal legalization comes, like who knows what that's even gonna look like, right?
Right.
Like I think it would more be like interstate commerce, right? Where New Jersey, New York, Connecticut, Massachusetts would be able to do business with each other. I don't think it would turn into, you know, all weed comes from California, like wine does, right?
Hmm.
It's it would it just definitely wouldn't work that way. And I think the Cali operators do think that when federal legalization comes, that's what's going to happen, right? Because they think they grow the best weed in the world, right? But for me, I would love for safe banking and I'd love for rescheduling, but you know, as far as federal legalization goes, I think it would help my clients more to not have that, but
Hmm.
if any one of them passes, it brings debt capital into the market. And equity capital still is available, it's just family and friends and people who haven't gotten tainted from cannabis. That's the only equity capital that's out there,
Yeah,
right? So you gotta grind and raise it from your family and friends who believe in you, more than believing in the upside of cannabis. And everybody always thinks cannabis is a green rush. It's like the absolute opposite of a green rush. It is the most compliant, difficult, overtaxed, overregulated business that there is. If you want to get into like, labs, or food safety, it's very similar to cannabis, so it's one of the toughest businesses to run and run profitably. You really do almost have to be crazy in some sort of way to be a cannabis operator. And I am one of those people, and so are all my clients. So we definitely think that the cannabis industry still has a lot of legs. And it's a state by state game and a location game.
totally. Well, Joe, this has been awesome. I really appreciate you taking the time today.
Of course.
Yeah, man, if lenders or operators want to get in touch with you and see about working with Upwise, what's the best way for them to do so?
You could call us at 775-5 Upwise, and then you should email us at 420@upwisecapital.com. Could also see us at all the shows. We're definitely out there. And yeah, we appreciate it, Jordan. Appreciate the time.